the requirements attached to the PPP loan. We are pleased to welcome our 3 panelists with expertise in the program. Each will have some time to present their information, and then that will be followed by a Q&A session. Today we have Carlos Gutierrez, Deputy District Director for the U.S. Small Business Administration San Francisco office. Charles Crohare, Small Business Banking Manager for Uncle Credit Union. Frank Balstreri, sorry Frank, Consulting Partner in Charge for Sensiba San Filippo Consulting LLC. And we have Jody Amos, Principal of Amos Productions, Treasurer and member of the Chamber Board of Directors. And today, Jody is managing the technology for the webinar, as well as moderating your questions for the panelists. So thank you to Carlos, Charles, Frank, and Jody for participating and supporting the webinar on such short notice. Before we begin, a bit of background on the Livermore Valley Chamber of Commerce. Just a quick note there, Jody, aside, Carlos has not received your email. So we are working on that. We may have to reorder our speakers, but we are flexible. We're doing this on the fly.
I will check his email address.
Okay. A bit of background on the Chamber of Commerce. We were incorporated in 1937. We're a membership organization comprised of businesses and organizations, public, private, and nonprofit in the Livermore Valley. Our members represent multiple industries, large and small, from wineries to the 2 national laboratories and everyone in between. Our operation is powered with a staff of 5, supporting our economy with opportunities to inform, educate, connect, promote, and represent issues relevant to our membership. Well, this is our core mission during the COVID-19 shelter in place, which went into effect on March 17th. The Chamber team has leaned in and extended our reach beyond our membership, supporting all businesses in the Livermore Valley, including standing up a new website at livermoreupdates.com within the first 7 days. It is a central resource for businesses for current information and also for them to post their operating information during the SIP, the shelter in place. We drive visitors seeking open for business information on restaurants, retail, and other services during the SIP to the livermoreupdates.com website. And even though we too are affected by the SIP requiring a reduction in our hours, we continue to deliver. This is our moment and we are meeting it. Now to our program. First up, we had Carlos Gutierrez. Is Carlos in there yet, Jody?
I am not seeing him right now. I just sent him another link, and
Okay.
I also sent him the attendee link where I could bring him in.
Okay, very good. So Charles Crohare, are you ready to step up first?
Well, yeah, I'm happy to welcome everybody as far as just chat a little bit as far as I want to save. I'm really not going to go into too much detail at this point because I think all of us probably should just respond to the Q&A as far as after Carlos does a little bit of overview once we get him in. But want to welcome everybody as far as my name is Charles Crohare. I'm with Uncle Credit Union. Many of you already know me as far as I've been in Livermore my entire life. I've been a community banker as far as here in town for almost 40 years. Scary thought. Just recently came over to Uncle Credit Union to help them establish a business or really energize. How about that? As far as the business banking for Uncle Credit Union, something that we want to do because we feel that the small business has been forgotten in the financial world. So something for us to work on. So I am here to help, and that's kind of the message I want to send to people. I love working with our local businesses. Even if you have applied with another lender as far as through this PPP process, I'm still happy to be a resource for you. Talk with me, and my information will be in this presentation, so you can call me or email me. Happy to do that. Uncle Credit Union's been around in Livermore, been established almost 70 years ago. So it's right here in Livermore, continues to have the main office in Livermore with some other offices in Pleasanton, Tracy, Stockton, such. So we are here to help. Give you a little bit of background as far as with Uncle Credit Union. We've been partnering with a company called NewTek as far as for all of our SBA financing over the years, and that's still true today. NewTek is the largest non-bank SBA lender in the country, so they're very versed on handling SBA loans. And so just like everybody else, they've been buried as far as with the PPP application. So we've been trying to work through that. My role, as I see it, is trying to help everybody through that process, get them set up as far as with the application, get their backup documentation ready to go as far as, and that way, once the underwriter with our partner NewTek is ready to input, as far as we can get it done as far as and move it along fairly quickly. I know a lot of folks have been frustrated. I'm hearing a lot of that because certain institutions are only helping their clients, their customers, or not at all, period. And so they have just shut down. As far as that's true throughout, as far as I've heard that across the country, certainly here in the Bay Area, the Tri-Valley. So it's not just one or two banks that may have been hitting the news. There's a lot of them. We just simply were not prepared as a nation to go through this. A lot of businesses applying for one program through a very small channel that tends to bottleneck up. So I'm here to try to help them through as far as, but everybody just, we all have to be patient and do the best we can. Upon funding, as far as one of the things that I know Frank will probably touch upon this more than I will, so I'll leave it up to him, is just making sure that you have your ducks in a row. So once you do receive the funding, you're ready to go and sort of have a plan to execute within that 8-week period that we'll talk a little bit more about later on. Hopefully we'll be able to touch upon some other matters as well, as far as that, besides the PPP. And yes, unfortunately, that's my dog, so I can't hit the mute as far as if I'm talking, so never fails. But hopefully we can talk about some other programs as well. But the EIDL, certainly the second most popular right now, but then there's some other SBA programs that could potentially apply for others. And certainly, hopefully, we'll have some expertise in from the others as far as, but I know there's some state programs, and hopefully we're going to be working on some local programs as well for everybody. So that's enough rambling for me. As far as I'll refer back to you, Don.
Okay, thank you, Charles. Okay, I think we are still waiting. We're having some technical difficulties, Jody, with Carlos. He's still.
Yeah, I've resent the link to him a couple times.
Okay.
Sent him an attendee link so I could bring him in, but I still don't see him.
Okay, well, we're working on it here. So next up, then we have Frank, the consulting partner in charge for Sensiba San Filippo. It's a well-respected CPA and financial services firm serving the Tri-Valley and with offices throughout California. Frank also brings many years of expertise in the accounting profession and is part of the strike team assigned to the PPP program supporting clients and local businesses. Welcome, Frank.
Thanks, Dawn. I'm going to try and share my screen real quick here just to see if this will work. Can you see that screen that says economic uncertainty?
Yes.
Perfect. Okay. So just a little bit about Sensiba San Filippo as well. We've been around for a little over 40 years. We're a full service firm in the Tri-Valley area, headquartered there with offices throughout California. We do audit, tax, and consulting. And right now, one of our main focuses in consulting is to work with companies on these PPP loans. So for about the last 4 to 5 weeks, I've been living and breathing this 7 days a week, trying to get companies lined up with banks so that they can get funded. And now we're starting to head into that period where many companies have received their funding. And so now we're starting to shift a little bit to the concept of forgiveness. But in the last week or so, this concept of economic uncertainty has reared its ugly head. And many of you may have seen some articles out there around whether or not you should actually take the money or pay it back. So I wanted to just spend a couple of minutes on this today, and I'm sure we'll get some questions as part of the Q&A. The real message here is just be careful and be prudent. Don't do anything foolish. If you've committed fraud, expect to get caught. And by fraud, I mean, you've submitted fictitious payroll, your company doesn't really exist, all the really bad things that people do, unfortunately, when we have these types of situations happen to us. If you're out there and you've done, your best effort to adhere to the steps in the program, I think by and large you're going to be okay with a couple of caveats that I've got on here. So the standard that you're going to be held to is determining whether or not the current economic uncertainty makes a loan necessary to support your business. And so what does that mean? Unfortunately, we don't have great guidance on that yet. And what I know is 2020 hindsight will always be perfect. So you will be judged after the fact based on the decisions that you've made today. And so just some real sound advice for you. You need to make sure you document in writing right now why you think you needed this loan. And it really depends on the industry that you're in. I'll give you an example. I work with a local supermarket chain, and they applied and were received approval for a loan of north of $2 million. And we've been going back and forth with them trying to determine whether or not they should really take the money. And we ultimately all concluded no was the right answer. They haven't seen any economic harm yet, and their cash flow projections for the rest of the year show that they'll be okay. So they were entitled to the money, but they don't technically qualify under the terms of the plan as it's out there. I really believe that engaging in a discussion with your attorney is the best course of action here, but I would do that after you pull your ducks in a row. So look at where you are today, look at where you think you're going to be over the next 6 to 12 months. And some of that is, I don't know, but you may look back at what happened back in the 2008, 2009 timeframe if you were in business then, and how did your business react to that? Did you come out of it, fast, or, are you a business like us as a CPA firm? Everything's fine right now, but who knows what's going to happen 6 to 9 months from now when companies may not need an audit anymore. We keep pushing the tax rules around and changing the deadlines, which impacts our work. So there's uncertainty, but I think it's important to really put down in writing today what your thought process is. So when you come back to that concept of 2020 hindsight, if you don't have your ducks in a row, it's going to be a much harder conversation to have. But if you're prepared and you've put some sound judgment together, I do believe that's going to help you substantially in this process. And on here, I listed a couple of things you might think about. So what's your current financial state? Have you had layoffs? Are your sales down? Have you furloughed people? Have you seen a reduction in pay for your employees? These are some of the strategies that are out there. So if you've got that, then that's a good fact towards you needing those loans. As I said, you should look at your forecast and perhaps running a couple of different scenarios would be helpful. Look at some industry data. Like I said, food retail, probably not something that is hurting right now. But if you're clothing retail, you may not still be in business. So those are the type of things you'd want to look at there. And then the SBA did give 1 more week to figure this out. So you've got until May 14th. And I do believe we'll see some more information come out over the next week or so. Right now, they're trickling out information, every day, the day and a half. They seem to add a new question to the Q&As or the FAQs, that are out there. So I think that will be helpful, but just be prudent. Make sure you talk to your advisors and get some good guidance there. And then if I can get my slides to advance, there we go. So the next question that obviously comes up is forgiveness. And I saw a bunch of questions come through already related to this. So right now, the big challenge is the banks and the SBA are still focused on getting the money out, and they haven't really pivoted to think about what forgiveness is going to look like. I expect over the next week or so, hopefully Carlos will have some better news when he gets on and speaks, but we really need better guidance on how to actually apply this. And I can see from some of the questions that were already submitted, unfortunately, the answer is going to be, we're not quite sure yet when it comes to that, but I think we can at least lead you in a good direction. But once again, prudent business practice always will be a good safe harbor for you there. And then in terms of the use of the funds, I'm sure most of you know, it's a 75-25% split. They want most of the money to be used for payroll. That in and of itself creates a whole host of questions. I've laid people off. How do I bring them back? Do I need to bring them back? They're hourly. I pay them X. Do I pay them Y? I mean, the questions really just go on and on and on. And so we're trying to navigate and advise people as best as possible. And really the calculation relative to forgiveness is a bit of a waterfall. And we can talk a little bit about that as some specific questions come up in the Q&A. But the one thing you want to be careful of are the potential haircuts that are out there. One of which is for a overall reduction in headcount. The other is for a reduction in pay. So it could reduce the amount of forgiveness that you can ultimately get on your loan. And one side comment there is, one of the strategies that I've been thinking about and I've been discussing with my team, which is not 100% in accordance with the plan as it's laid out, is do we really want to spend all this money right now to bring people back and then have to lay them off in 8 weeks? And that's a tough one. I hope some guidance will come out relative to that. The AICPA, which is the governing body of the CPA firms, did throw their hat in the ring and say, perhaps we should wait until the shelter in place is over to start the 8-week period. I don't think that's going to happen because companies are already 3 weeks into the money right now. And so that would be really unfair to them to do that. So the amounts that don't get forgiven, though, roll into a 2-year loan at 1% with a 6-month deferral on the payment. So that's not necessarily a bad deal for companies. So I think that's something to consider as part of the overall strategy. And then you can prepay it at any point in time. So I think those are all really good facts. I will stop sharing now and see if we've got Carlos on. If not, we can maybe roll to the Q&A.
Carlos is on.
Yes, so welcome, Carlos. Are you there? Hello?
Yes, I'm here. Hello.
Okay, welcome. Welcome. So we don't have your video. I don't know if you're just calling in on the phone or not. I know you had sent some slides over. So if you would like to get rolling, Jody, can you help us with that or?
Yeah, Carlos, do you want to pull up your slides or do you want me to?
I can pull them up. I just tried to set up the video, but it looks pretty. Oh, wait a minute. There we go.
There we go.
There you are. Hello, welcome.
Hello, everyone. Sorry about the technical difficulties there. Using a government computer, and those can be tricky things.
That's okay. We're just happy that you're here. So,
Alrighty, give me 1 second.
Charles and Frank have already gone, so now you're on, Carlos. So welcome.
Okay, give me 1 second. Let me pull up these slides, and then I'll do a share screen. Okay. Give me a sec.
think a future webinar will be how to do on-camera interviews, like broadcast talent, right? We could all use that. So we appreciate everybody's patience and as we're all learning these new skills.
I did post a good blog.
There we go.
All right, we're having trouble here, but give me another second. Let me see if I can, it'll work now. All right, let's try that. Can y'all see that?
No, not yet.
Not yet. Okay, give me a second. All right.
At the bottom of the screen, hit the share screen, and then it'll bring up a bunch of windows. Choose your slides.
I did indeed do that, and then it has a share there. Well, if it makes it easier, if y'all have the slides, you can just go ahead and do it, and then I'll kind of follow along here.
Okay, yeah, let me open them up real quick.
Yeah.
And of course, I've got a lot of. Let me open them real quick here. Okay, almost there. There it is.
Okay.
All righty, that's the one. All right, so we'll go ahead and get started here. This deck, we can switch to the next one. This deck here is current as of 5/7. As was mentioned previously, these things change a lot from day to day, sometimes hour to hour. We're getting updates pretty frequently. So some of the things and updates have been included for updates that have occurred this week, but we'll get to that as we get to it in the slideshow. You can go to the next one. I know there was a focus. There was requested for PPP. So these are other elements here: debt deferment and the EIDL loan. We're going to come back to these just so we can go ahead and get to the PPP information first, because I know that's what's highest on everybody's mind. So we can skip to the next one. And one more. One more. Keep going. All right. So there's already been some general overviews, but I'll just reiterate. So the Paycheck Protection Program is a program to get folks back on the payroll. And what it allows for is up to 8 weeks, obviously, of expenses that would be covered. The cap for each employee is $100,000, and the way it's figured out is based on 2019 taxes. Revenue and information that you would put on taxes, payroll information, annually divided by 12 and multiplied by 2.5. There is a length because so many businesses are different. You know, a restaurant is clearly different than a barbershop. There's a link on the Treasury website about how to calculate for each different type of business. So there's a document in there if you wanted to look in the CARES Act page under the PPP, in case you wanted to find out for your particular business how to calculate those payroll expenses and what to include. You can also look for support and technical assistance. We're gonna go back to this on a previous slide, but from the Women's Business Center, Small Business Development Centers, obviously the Chambers of Commerce are a good resource, and the Veterans Business Outreach Center. And those folks can help you with determining what documentation is necessary and how to figure out these financial formulas and what to include on those applications. So the key purpose of those is to keep people on the payroll or rehire them quickly. One of the elements is the 8-week period starts the day that funds are dispersed from this loan. And they will be forgiven if used for payroll expenses, not to exceed 25% on things other than payroll. So we've had some questions just to get, address it now while we're on this section. What if it's over 75? What if I use it all for payroll expenses? That's fine. it's just a max of 25 for non-payroll expenses. So you can't go over 25 on things that are not within the categories of payroll expense. Next slide, please. These are the details. These are the types of businesses that are eligible: small 501c3s, veteran-owned, tribal concerns, sole proprietorships. That's a big one. We get a lot of questions. Well, if I'm a sole proprietor, am I still eligible? Yes, you are, and the figures would be based upon the sole proprietor as one employee per se. So the max loan is 10 years. The max loan is 10 million. Interest rate of 1, and the term is 2 years. Payment deferral is for 6 months, and interest does accrue during those 6 months. It's 100% guaranteed by SBA, no collateral, personal guarantee, and there's also no prepayment penalty. This is another big one because we've had a lot of inquiries about, which I heard a few earlier when I was on, about folks that say, "Well, I want to pay it off immediately. You know, I didn't need that amount of money, or I got too much. The calculation was wrong. Can I just go ahead and pay it back?" And the answer is yes, and there's no prepayment penalty. Those things need to go through your lender, though. There's no portal by which you would return those funds directly to SBA. All those things still go through the lender that you have, so you'd have to coordinate with them. Additionally, if you're looking for a lender that does the Paycheck Protection Program, there's this website on sba.gov/paycheck protection. There's also resources at the state level. California has put together a list of lenders in the state that are doing it, and sometimes by region. The small business development centers also have those lists, and they're always being updated. They're very good about always updating, because they're dealing directly with clients that come in and tell them, "Well, I'm using this lending institution," so they create their own list of the lenders that they know are participating in the program. It's also important to remember some lenders will participate for a specific window of time based on the amount of funds that they want to allocate to this type of loan program. So it might be that, you know, one lender will say, "Okay, we are open," and then you might call them the next week, and because they were on that list, and they'll say, "Well, we're not doing it. We're not doing it anymore." That doesn't mean they never were doing it. It just means, you know, maybe they had open for a short period of time, and they stopped right now, and they may reopen it later. And that'd probably be a good question to ask them if they've finished completely, or if they plan to open it back up later on as well. Another, I guess, recent development is SBA's added a number of non-bank lenders, such as Square and Cabbage and others like that are doing these type of loans. Some of them have stipulations. For example, Square is doing these type of loans, but only for their customers. But that's a large group of small companies that use Square, and they can go to Square to see if they can apply for the loan. We have a list of those that I can send you. If at the end here, it'll have the email for the office, and we can send you the list of non-bank lenders. And there's also a larger list that I can send you of the North California lenders as well, if it's not on here. Actually, probably the easiest way, just for your constituency here, Don, I'll just send it to you, those two things, and then you can send it out to folks. Next slide, please. This is an overview of what expenses are included. So I won't go into each one of those, but you can see here which ones are included. And more importantly, these are the ones that are not included down here. Commissions, tips, payments to independent contractors. This is also a key distinction I wanted to make in the calculation. A lot of questions early on were, I have independent contractors, let's say 10 of them, and I'm going to apply for this loan, so I can go ahead and put them down as employees, correct? And that is not correct. Independent contractors cannot be included under any circumstances as employees for the purposes of this calculation. And one of the reasons is independent contractors, 1099 contractors, they can apply for this program themselves independently and autonomously. So if they were an independent contractor and it's only them, then it would apply kind of in the same way as sole proprietorship would, and they would apply as though having one employee. What else here? Sick leave and family leave, those are not considered payroll costs. Next slide, please.
Hey, Carlos, real quick. I see a question that would be great for this slide here. So it says state and local taxes. What about federal taxes? Would that be covered?
You know, one of those things, a lot of the granularity, and I hadn't heard that question, so I'll try to look into it. But some of these things, as was mentioned by the previous presenter, they're being developed right now since the program is so new. And I had that one in particular, I have not seen an answer to recently, but it's kind of like a barrage. I might have had that answer, but I'll have to get back to you on that one. I think that might fall into the category of detailed elements of the forgiveness portion that just have not been developed yet. And I know earlier there was kind of a question of whether we would get that information or not soon, but we're still waiting for guidance on that. But I see that Frank here might have some feedback on it.
Yeah,
he just popped up there.
Jody, as it relates to federal taxes, my understanding is the answer is no. When you look at forgiveness, the way you calculated the average payroll going into this is how you will look at the payroll expenses that count towards forgiveness on the back end. So state taxes, your SUT and your ETT, I believe, are the two that count. Those are typically not very large. So if you left them off, it's probably not a big deal for you. You're not going to get a huge benefit from it. But federal taxes, no, that's been excluded from the start, and I don't expect that will change.
All right. Thank you, guys. Next slide.
Next slide, please. Yes. This is pretty much, we've gone over this already. This is kind of a reiteration. Basically, this is saying that these stipulations have to be met for it to be eligible for forgiveness. The portions that are not would just be converted over to the conventional loan at the 1% interest rate. Next slide, please. I do want to mention one thing. Can we go back to the last one? I forgot. I wanted to mention something at the bottom there. The last one. These submissions for forgiveness to the lender need to be submitted no later than June 30th. The other element related to forgiveness is how early can you start applying for forgiveness with your lender, and that is 7 weeks after the disbursement of funds. So obviously, the 8-week delineating point is how long you have to use those funds on these type of expenses, but you can start engaging with your lender as early as 7 weeks after funds have been dispersed. Next slide, please. These are some of the websites that I mentioned where you can look for updates and the most recent guidance. Those FAQs, as was mentioned by Frank as well, those are updated all the time with new questions. There's also an open period right now on the interim final rule where some of these questions about details related to forgiveness and policy questions can be put forth still to be considered in the interim final rule development. And I believe that that's till May 15th. Next slide, please. This is the list right here of some of the non-bank lenders. And as you can see, there's a lot of them. Over these past few weeks, SBA has been working very hard to onboard as many of these as possible because of just the sheer volume of loan requests that we're getting. So this is good information, and this is one of those lists. I guess I'm glad we had that one put in here. But there is another one that I can still send to Dawn, which is the actual conventional lender lists as well. Next slide, please. So we're in phase 2 right now, and just for clarification, what I mean by phase 2 is there was obviously a first tranche of funds that was put out through legislation and appropriations. For those that didn't know, those funds were expended and all gone. And then there was another round of funding, which we're in right now. For this round, the SBA is pacing how many loans can be processed every day under the program. And essentially what that means is they're pacing the number that each lender can put in. And some of it was set aside also for those small lenders. 60 billion was put aside for small lenders. So no one lender is able to put more than 10% of the total PP funding authority. As of 5/6, this, in case folks were wondering how much has been approved, 183 billion of the 450 billion in funds has been approved, and that's for 2.4 million loans to business owners. Next slide, please. So this is our contact information here. This is our email address. If you send us an email, those come into our office and then get forwarded to staff, and then one of us will call you back or send you an email. Also, our phone number is right there. If for either one of those get routed to the staff at the district office, and we will get back to you. That's all I have, and now we can get to some of the questions I know I saw on the email. We can do those at the end. I defer to you guys on who you want to have go next. Thank you.
Thank you, Carlos. Okay, so now we're going to open it up to the questions. I think we already have a pretty good running list there, and Jody's going to moderate all the questions to the panelists.
Yep, I have one from Ron Witherspoon. I have heard that we're supposed to bring back all of our pre-shutdown staff after we receive the PP money and resume paying them, even though not open and don't have to have work for them. I've been told that if we do not do this, we will not be eligible for forgiveness on any of the money. I was under the assumption that we would just have to return what was not spent, qualified money only, over that 8-week period, which is correct?
I can go ahead and answer that one. So this is one that we've received a lot as well. The rule stipulates that the funds have to start being expended for payroll expenses the day after they're dispersed. It just means that people need to be put back on payroll. It doesn't mean that they actually need to be back at work. So the questions about shelter in place and quarantine requirements of the city, those don't come into play related to the requirements of the loan because they need to be put back on payroll. Now, whether they're put back on payroll and what their duties are, those are operational decisions that it doesn't really address, but they need to be put back on payroll even if they are sitting at home. And if they are put on payroll and on payroll for those 8 weeks, that portion of the loan would be eligible for forgiveness. If they're not, then whatever amounts are saved or not used in that capacity are not eligible for forgiveness.
It's not an all or none either. So that's that concept of a haircut that I mentioned. So there's a waterfall calculation that you need to do between looking at head count and then looking at actual, potential reduction in pay. So you're not going to lose all of your forgiveness, but you would lose some of your forgiveness by going that route. But once again, prudent business decisions need to be made, and it may make sense. And Carlos, you may want to chime in on my thought here, but it may make sense to not bring everybody back and hold some of that money for that 1% loan. So I think of a restaurant type of situation where maybe they're closed down still, or they only have limited staff that they could bring back. When this program was pushed out, it was thought that it would be a 3-week shelter in place, and now we're already, a multiple of that. And so is it prudent to maybe hold some of that money so you can buy inventory to be prepared for when you open back up again? That may be something to potentially think about.
Yes, that is correct in that any amounts that are not specifically used for the purposes identified in the guideline that would make it eligible for forgiveness, those to your point, those just get converted over to a regular loan at the 1% interest rate. So I can't speculate as to or make recommendations as to which would be prudent, but I will say that in that case, that's what would happen. The additional fund would be converted to a conventional loan, and then the business would be responsible for those at a 1% interest rate.
Jody, maybe you could let people know, those who are comfortable entering questions in the chat room, if there's any other way for them, you know, to submit their questions. Maybe you can just quickly.
Yeah, I think questions in the chat room or the Q&A would be good. I see there's 5 in the Q&A, but I've got a big list of questions that were emailed to us ahead of time too. So
Okay.
I'll try to go through these as quickly as possible, I guess.
We have plenty of time.
Yeah. All right. So I have a email from Tanya, and I kind of fall in the same category too. I recently hired an additional full-time employee, and they are currently on payroll as a new hire. Are there requirements that I need to meet for this employee, as they were not on payroll in 2019?
I'll take that. The answer would be no. That's actually a good fact as part of this program. So that's going to count towards your full-time equivalents during the 8-week period. So that actually works in your favor. And there's no requirement that you bring back the exact same people that were there before. So, you know, one of the issues that's come up, and we may as well address it right here, is there are some people that are better off on unemployment right now and will refuse to come back because of the added benefit they're getting. That extra $600 a week, I think, is what it amounts to. So if you're an employer and you notify your employees that you've now got your PPP money and you want to bring those people back and they say no, if you document that in writing as an employer, that will not be held against you in terms of the potential haircut that you might be looking at on the forgiveness side.
Awesome. There's a couple questions in here about part-time employees. Hours fluctuate. None of that matters as long as you're paying employees, right?
That's an area that's still a little bit unclear. You have to run some tests relative to full-time equivalents. The concept of full-time equivalents, there's not great clarity. You can find some information on the SBA website and in the IRS guidelines that would indicate a 30-hour week is how you would calculate that. So add up all your hourly employees, divide by 30, and that gives you a full-time equivalent. My preference would be to add it all up and divide by 40, which would lower that number a little bit and perhaps help companies. But that's an area where we're still waiting to get some guidance. And for that, the period that you're going to want to look at is really the first quarter of 2020. So when you start to think about your forgiveness relative to payroll, you're going to need to actually track this by employee and look at what you paid them on average during that period, and then compare that to what you're expecting to pay them during the 8-week period. So as you can see, it's starting to get a little bit complex here, because you're going to have detailed records that all tie back to your payroll tax returns or to the information that you may get from a PEO if you utilize a PEO, which a lot of smaller businesses do. So it's all got to reconcile, and it's not 100% clear as to how it all gets applied yet.
All right, I'm going to go to the chat room, the Q&A. Let's see, can we get copies of the slides presented today? I think so, Bob. I think we can distribute those. There was a lease in place, so I can potentially pay 6 months as long as it falls within the 25% as noted. So I guess the question is, somebody has a lease, and if it falls within 25%, can she pay for 6 months worth of lease expenses?
If no one's going to take that, I'll give it a shot. You're going to have to be really careful. You're going to have to be really careful with that 25%. That's not technically within the spirit of what is trying to be accomplished here. But once again, you know, it says up to 25% can be spent on those other items. So you're going to have to run the calculations on payroll first, because, for example, if you don't get to 100% forgiveness relative to your payroll amounts for that 75% threshold, and I'm probably confusing everybody a little bit, but if you don't get to full forgiveness relative to payroll, it's going to haircut that 25%. So, for example, say you had a $100,000 loan and you only had $50,000 worth of payroll. You were supposed to have 75. So you take that ratio, that's going to haircut that additional 25 that would have been available under the normal 100, 75-25 split on that. So once again, it gets a little bit challenging with the calculations. But Carlos, I'm anxious.
Carlos, you want to add anything to that?
Yes, there's a good point about the spirit of the loan. As I understand it, those expenses, the expenses that are incurred, that are covered under eligibility for forgiveness are supposed to occur within that 8-week period. So by that measure, you can't go 6 months out and pay for expenses in the future.
Right. I read somewhere in the application or loan docs that I signed that you have to provide all those documents, including your lease terms and everything. So I would think that would be a little tricky. All right. So
right.
I have,
and the question about documentation as well is an important thing to bring up. The level of documentation that's required is somewhat dependent upon the lender as well. They may require things that one lender may require things that another lender doesn't require. So these are important questions to ask when having the conversations with your personal lender. And another great place to start, as I mentioned, is working with one of the advisors with the Small Business Development Center. Jody there just mentioned that, all these documentation of payroll expenses is one of the key elements. A lot of folks don't have that paperwork readily available normally, because you wouldn't have to unless you were going to apply for a loan. But I don't think very many people that are applying for this one had intended to be applying for a loan. So it's just important to keep in mind that they're a good resource for letting folks know all of the paperwork that needs to be compiled in preparation for applying for one of these.
awesome. Let's see. We have if you do an employer match on 401k but don't fund it until the end of the year, is that still considered a payroll expense? I think that just goes to say that it's got to be within the 8-week period, but I'll leave that to you guys to answer real quick.
I will say that additionally, this falls into the category of some of the elements of forgiveness that just have not been outlined yet. There's just not guidance, because to David's point, SB has been focusing on getting these funds out. At some point, we will receive guidance, very detailed guidance, as anyone would expect to see in in an SOP or a FAR, because that's the way the government does things. But it's just not, that level of granularity has not been developed yet.
All right. We have a question here from Tanya. If you're a single member LLC and have been funded with the PPP loan and have also been approved for partial unemployment assistance with the SBA, or will the SBA forgive the PPP loan? This is assuming all requirements are met. For example, 75% of the PPP loan is being used to pay the one and only full-time employee, and the remaining funds will be used for approved expenses, rent, etc.
I'm a little confused on the question. Just because of the element of including the unemployment expense. So if it's maybe you wanted to take that one, Dave. I didn't quite understand if it's just a sole prop and the expenses are being used for payroll expenses for 75% and up to 25 for the other, then it falls into the general guidelines of the requirement. But I don't know, maybe we can get some clarification on what she means by unemployment, or when they would come off of unemployment.
I think this is a double dipping question. If you're on unemployment, can you seek forgiveness of the PPP loan? And I think I'm comfortable saying no, you can't do both. And that's going to be a challenge. Where things are really going to get challenging is for the employee on the back end of all of this, because I can see a lot of situations where employees may still be on unemployment and getting a check there, but now they're back on payroll as well. So it could potentially be a nightmare on the back end for them with their own personal taxes, trying to keep all of this straight. So that's an unforeseen, or I guess that was an unforeseen consequence of the way this is being rolled out. But by and large, if you take the PPP, you're not going to be eligible for other like items. Like, for example, there's a tax credit relative to payroll taxes out there. If you take the PPP, you can't do that as well. So just think of it from a double dip perspective. You can't double dip.
Right. Kind of going back to what Carlos said earlier, you know, I'm working with Bank of America, and it's pretty much all online. I had my own personal banker with B of A for a while, but probably 2-3 weeks before everything went down, I guess he left the company. So, and I didn't get assigned a new personal banker. But Bank of America, all their application process is online. It's like 100% online. So I waited and waited and waited and waited, and all of a sudden, bam, my funding was there. And I was a little scared at the time. And I was texting Dawn, hey, I don't know, now that I got the funding, I'm not sure how do I use it. So I waited a few days. Now, Carlos said you have to bring all employees back the very next day. I didn't do that. So what do you recommend there?
As far as I understand it, and this has been a question we received a lot, because for a lot of folks, they didn't anticipate that they would need to do it that same day as they received the funding. Obviously, if you have an advance notice and when you're going to receive the funding, it would make it a little bit easier. But we have heard that some lenders are, funding those loans, and there's not a lot of correspondence. I can't speak to obviously, the lender's operations, but in essence, and this is probably not the answer that you wanted, but if you miss those days would be not counted into eligibility for forgiveness.
Okay, so those days would not be accounted into, but I can start it up now for this coming payroll, and I don't know, I guess wash away that last pay period and start it now, and I'll be eligible for that portion of it.
As soon as you start, and it's in that 8-week period, then those days are eligible. And it's just a question of, and correct me if I'm wrong, David, from what you've seen there, and I know some of this guidance is still coming out, but it's the analogy of taking a haircut. The period is shortened, basically, because you started late.
We have one here. Let's see. We are a construction company, and over half of our staff was laid off, and we were unable to do work until this Monday. We did have one essential job that was going. Most of our clients are still SIP. Would this be considered economic uncertainty for us, whether, as we don't know if we will be working or not? Depends when SIP will be released for our clients.
Yeah, I think that's definitely a good fact, and having to lay people off and seeing a dip in revenue is certainly something that I think would qualify you under the economic uncertainty threshold. But you still just want to make sure you document that, what your thought process was. That seems reasonable, though.
Another question: if I receive my loan today and I owe PG&E from April, will that count as forgiveness, or only the bill that covers after 5/8?
Sorry, there, I had it muted. Give me a second. as I understand it, it does not cover the previous expenses. There are elements of the idle, which we really didn't get into, that would cover some of those things. But that's a different loan program, and it's managed by SBA. I don't know if I wanted to talk about that one today, or we can talk about that one on a different webinar.
There was a question earlier after we talked about it. What about workers' comp? Is that considered a payroll expense? We have to pay it, and I think the answer was no.
Correct.
All right, let's see what else do I have there. What utilities qualify as forgivable? I think there's a slide. I think we kind of skipped over it real quick though. Somebody's asking water, waste, electric, gas, internet, phone. What about garbage? I didn't see anything about garbage.
If it's a typical business operational expense, those things would typically qualify.
I've seen people ask if insurance would qualify. I would say no. Think of your typical utilities, and I would say garbage would get thrown in there.
And I had another question I had asked Don. So I got funded right around the first of the month, and my payroll, I do payroll twice a month, and my payroll would be my last payroll would fall on the 5th. So is the forgiveness for the pay period or the pay day?
I think that's still a little bit unclear at this point in time. That's one of the questions we're hoping to get some guidance on, because I've gotten companies come to us and say, well, I'm just going to start adjusting all my payroll dates, and I don't know that that's really what you're meant to do. I guess one thing I'll throw out there is there are options. We're talking about payroll here, right? So a strategy that you may want to look at is, do you compensate people, through bonuses or something like that? So if I think about what that PPP program says, is you can't pay people over the equivalent of $100,000 during this 8-week period, right? And that number comes out to about 15,000 and change, 15,385, I think is the actual number. So something we've been kind of bouncing around is, suppose I had workers that were working all the way through this pandemic because we're an essential business. Think of that construction company, for example. Say you've got one crew working and you've got 3 crews that are on the sidelines, right? A way to potentially use some of those payroll dollars would be to bonus those that were still working. Think of it kind of like a hazard pay. My job is to work with my clients to figure out how to maximize the forgiveness if that's what they want to do. But those are some strategies that I think you'll see employed as we move through this.
All right, I think just looking at a lot of the questions here, I think we've answered most of them.
Anita has a question around gas transportation.
Oh yeah.
And I've gotten this quite a bit. And Carlos, I don't know if you might be able to chime in on this. This is completely unclear, and it's starting to raise questions, especially those that are in construction, where you've got, or anyone that's making deliveries, right? If you're delivering stuff to a job site or to a business, does the gasoline included, relative to those deliveries, become part of what is considered utility? I know there was something out there that talked about it briefly, but I haven't really seen anything else come out. And Carlos, I don't know if you're privy to anything on your end that may talk about that.
Yes. So the answer is no. And, but we are getting a lot of these questions about very specific details, like the gas or some expense that's not typical, that not a lot of businesses have. And I would love to be able to give some guidance on that, but it's not available yet. Hopefully, to your point, it'll be coming out soon. But I would expect that they won't start working on that until the funds from this phase are expended. So I wouldn't want to tell people look out for something next week, because I really wouldn't expect it that soon. I will add that since these are being managed by private sector lenders and non-bank lenders, the best resource, because the guidance is going to be pushed out to these lenders from SBA HQ. So the best resource for a lot of these questions is going to be the lender. It's not necessarily something that they'll find on SBA website or Treasury website. Prior to that, it'll all probably be coming out at the same time. So their lenders might just get it just a little bit before, because they're getting guidance through their network with SBA. So just waiting on that.
Another question we had was, say there's, we don't have a lot of work going on. A lot of my employees and others, I saw another question in here, so it's a very similar question. They filed for unemployment before we got the PPP. So now that we got the PPP and want to use it, they all need to drop off unemployment. We start that 8-week period. What happens after that 8-week period? If we still don't have work, can they refile for unemployment, or do we need to keep them on for an extended period of time coming out of our own pocket?
I think the answer is they can refile for unemployment, and that's unfortunately kind of the unintended consequence of this. The thinking was we'd be out of it by then. I'm not sure that that's necessarily going to be the case, and that's why the comments I made earlier are probably a little bit in contradiction to the spirit of the program, because you want to make sure you've got some cash to survive beyond this 8-week period. So you have to make a decision. Do I bring everybody back now, or do I bring back certain people? Like, for example, I'll go back to my restaurant example. You should be cleaning and reconfiguring your restaurant to get to the other side of what this is going to look like. And so rather than going and hiring a third party, you might want to try to do that with your own labor force. And they may quite frankly say, I'm not coming back, which gets back to my other comment around how you can protect yourself relative to that. But I think part of all of this, you've got to figure out what the right balance is between forgiveness and, this 1% loan over a 2-year period. I know that's not 100% in line with the spirit of this program, but if I'm a business owner, I'm going to consider that, because I want to make sure that when I get to the end of whatever this shelter in place looks like, that I can reopen my business and then hire and pay all these people as well. That has to be a consideration in here somewhere.
Awesome. And then there was a question, if somebody hasn't applied for the PPP loan yet, can they still? How do they do that, and what's required?
Yeah, so I'll go ahead and take that. They can. Oh, sorry. Did you want to jump in there?
No, go ahead.
I'll wait.
Go ahead.
I was just going to say the same thing. Absolutely, the program is open. There's still funds from this new round of appropriations, so they can definitely do that. And the best thing to do is start by looking for a lender from these lists. One of the ones that was provided here in this slide deck. But another great one is the list provided by State of California. So that's the best way to get started. And also, in coordination with the lender, they'll, as I mentioned, it differs from one lender to the next. They'll let the potential borrower, the small business, know what paperwork is going to be required.
Let me just add on top of that. So, and this is not a slam against the larger banks, but don't go to B of A, don't go to Wells Fargo, any of the large banks. You're not going to get anywhere, unfortunately. You need to go to someone like Charles that hopefully still has some availability here. And it's those links to these smaller banks that you need to go to, they have been miraculous over the last 2 weeks. I think I've funded probably, somewhere north of $10 million with some of these smaller banks for all clients of ours that were struggling. And you guys have already touched on it. You filled out an application online and you don't know what's going on. And, you get an email on a daily basis from some of these lenders saying, hey, we got your information, but it doesn't really tell you anything, right? And so if I want access to money, I'm going to one of those smaller institutions. And I'll give you the list of what they're going to require. It's pretty basic. You need your 941s. You need your year-end payroll register. You need your articles of incorporation and bylaws or partnership agreement or LLC agreement, whatever you have. The amount that you put on there for average payroll needs to reconcile back to what's on those 941s, making sure you take your haircut for those that make over $100,000. And they're going to want a copy of your driver's license too, because the banks need that for identification purposes in order to be able to open up an account. There's also the PPP loan application, which you can get on the Treasury website. It's a very basic form. It's not really difficult to fill out. The tricky part is coming up with your average payroll. But other than that, that's what you need to get into the program. But the most important thing is to find a lender that can help you right now.
And if I could add to that, Frank, a little bit, I mean, the driver's license is not as much for opening an account because some lenders won't require you to have an account with them as long as you have it elsewhere. But it's also for the beneficial ownership requirement that the government places. We have to show proof that we've identified you when it comes to signing those documents. So the driver's license is for that more than anything else.
I had another question. If somebody's a sole proprietor, they don't pay themselves as an employee, but they take a draw, can they draw money, and would it be forgiven from the PPP?
So the way the sole proprietors work is you have to look at Schedule C, and I'm not a tax guy by background, so I struggle a little bit with this myself, but line 31 of your Schedule C is what they will look at, which is net profit from self-employed business. So to that, you add line 19 and line 14, which are any medical payments that you pay, premiums, and then any retirement benefits that you pay. You add those three together, divide it by 12, and multiply by 2.5. And that's how you calculate your estimated loan amount for a sole proprietor. And then on the back end for forgiveness, it's what do you pay yourself during that 2-month period, which is driven off of that calculation going in.
Excellent. I did not know that.
Just if I can add one thing, Jody, as far as to what Frank just said, there is a little ambiguity as far as, but another line as far as on that Schedule C would be depreciation if they do have that, because it's not a true expense, it's a tax expense. So adding that back to have a more accurate figure of what your net income is for that business may help for some, depending on if they have depreciation.
Right. All right. I think there's a couple more questions in here.
Jody, while you're looking up those questions, I have a question for Carlos. When you were doing your slides, you said that the policy for the latest bill is still a work in progress and that we have up until, I think you said May 15th to submit comments on the final rule. Where do we submit those comments to? SBA?
Yes, so if you go to the SBA website under PPP, you'll see the interim final rule, and on that document, it gives the instructions for where the end date, it gives the May 15th end date, and it gives instructions on where those are supposed to be forwarded to. I don't have it right in front of me, but it's definitely on the website. I looked at it yesterday. So that's where you would go to figure out where to send it. I can look it up here in a sec while we're doing this, but that's the short answer. Let me go ahead and look it up while y'all get to another question.
Thank you.
I have another question from Adam. He says, this has all been very helpful. While here, I applied through Square. I'm a sole proprietor. Do I have to repay the funds? It would be used to replace monies I've lost from lost jobs during shutdown.
So I'm going to assume we're talking about a Schedule C type of situation again. So as I said, it's calculated off of what is on your Schedule C. So you would be allowed to pay yourself basically the 2 months of your net profit, which, you know, is that line 31 plus depreciation, as Charles said, and then the medical and retirement. So you can pay yourself that amount. That's what should be forgiven. There's that dangling 0.5%, because remember, we multiply that by 2.5. That amount, I understand, will not be forgiven. And Carlos, maybe you can comment. I don't think a sole proprietor is going to get the option to apply rent or utilities to that extra 5%. So it is going to roll into a loan, or you pay it back.
And I know everybody is so focused on the forgiven piece component of this program. It's sort of, I mean, 1% for 2 years is not a bad deal in some situations. You really have to look at your individual circumstances. A short-term loan at 1%, that's cheap money. So I'd hate to have people get hung up on the forgiven piece. Certainly, as far as if you can, as far as that's great. But kind of going back to some of the comments Frank made earlier in terms of preparing as far as for when we are out of this shelter in place. I mean, using some of that money towards other things to be prepared may not be a bad decision.
Yeah, Charles, I completely agree.
I was also going to suggest maybe in Adam's case, he might want to look into the PUA, the Pandemic Unemployment Assistance. It's unemployment for independent or sole proprietors, if I'm not mistaken.
Yeah, the one thing to be careful there is that concept of double dipping. So that's what you want to make sure you avoid, that you're not double dipping.
Yeah, that's what I said. Instead of, since he's a sole proprietor, instead of, and Adam, I'm not sure if you have employees or not, but instead of, if you're sole proprietor, it's just you, instead of taking the PPP, you might want to look into the PUA. Correct me if I'm wrong.
I found the answer there, Don, for the question about where folks can make comment. Let me pull it up here. So they would go to www.regulations.gov, and they can make comment there. And the reference number they would use is SBA-2020-0015. And they can do that until the 15th of May.
Okay, thank you. I think I would like to see some flexibility on the 8-week from the disbursement date. People get a little overwhelmed. They're just trying to keep things going. And oftentimes the business does everything from nuts to bolts. And now they have to then, activate this program. So I think a little loosening of that rule might be a little relief for folks. And then I think that folks should weigh in on some other elements of the ruling that could be helpful to them, because I think the government, federal government, and the CARES bill is intended to assist us and help us and not become over onerous on us, so that we can continue to operate and keep people employed and keep money coming for our employees and for our businesses until we recover.
Arlette asks about draws, going back to draws. Is that the same for an S Corp?
I think that's going to be a little bit different in an S corp situation. There were some provisions that that put some limitations, and Carlos, maybe you might know about these, but there were some limitations that were supposed to be put on S corp draws. I guess the question I'd have back for you is, do you take a salary out of the S corp? If you're taking a salary, then I don't believe the draws. Well, actually, as it relates to payroll, I don't think the S corp draws are going to count towards that at all. It's only payroll. So you would have had to file under a different format to get those S corp draws to actually count, because that's technically not payroll. That's income that flows to you as a business owner.
I can't speculate on that one. I don't have an answer for specifically how it would apply to S corp. I'm not really an accounting guy myself, so I'm not sure if the draws would be added to the payroll expense for total payroll.
All right, maybe one more question here.
Oh, wait a minute. I will add, that I think that a question like that, we were discussing just now the policy element, and a question like that is something that I would like to see come in to the SFO mail, because some of those things we can escalate. And if there is an answer, maybe it's just I hadn't seen it yet. I'm reading over these interim final rules and FAQs. Maybe I haven't seen it, but those come in all the time. So go ahead and send it. You can even put a CC Carlos Gutierrez so that they'll know to send it to me, and I'll escalate that, and we might be able to get it for you. And that goes for some of these other specifics, unless I've already identified it as being part of the category that we're waiting for guidance. But if it's something that you think might be out there already, an answer, and you feel like, well, it would be worth it just to go ahead and get it into our network and see if we can escalate it, feel free to send it and go ahead and CC for them to send it to me, and I'll go ahead and start working on it. And if there's an answer, great, and I'll let you know, hey, this is what I found out. Some of those things have to go through legal, and I have gotten I have received answers on, I'll say, 35% of these that we didn't really know at that time, because they're pacing it, and some of those things come in maybe the next day. Also, to the point of Dawn was making about the policy comments, it's very, very important that businesses and folks in the community, such as yourselves, make those comments, because folks in DC at headquarters are coming up with the SOPs and guidelines for these things, and they do read those comments and look to those for when they create new programs. And as we've seen, there was a first tranche of funds, there's a second tranche, and right now there's discussions about another funding package. So, any input that comes from the business community will be looked at when they develop those programs. And I don't think we're looking at the last one here.
All right, this other question came in. We pay every 2 weeks. Can we adjust the payroll and pay our employees a couple of days early to equal the same 8-week pay period we use? Oh, it just went away. Where'd it go? While I was reading it, it disappeared. Oh, because Charles answered it.
Yeah, it was just more talking about, can we adjust the pay period? And my response to them, I didn't know if you were going to cover it. So my interpretation, as long as the pay period is within that 8-week span, as far as they should be fine. But more as far as it was kind of previously stated, I think by Carlos, is work with the SBA lender that you're getting your PPP through and how they interpret that. You may not have to adjust your pay period as long as you can demonstrate that those hours were accrued during that 8-week period. But again, it really depends on the interpretation of the SBA lender that is doing their PPP.
Right. And Carlos, can you repeat the website where we send the emails?
Sure. Give me 1 second.
I know it was in your slide.
Oh, the emails to me?
I think it was to the SBA.
Or to make comment.
Right.
Okay, give me 1 second. Pull that back up. All right, so the comments would go to, if for the full website, it's http www.regulations.gov. And even if you don't put all that things at the front, if you just Google regulations.gov, it'll come up. And when you reference the rulemaking portal, the number you're going to be looking for is SBA-2020-0015.
Maybe we can post that up on the Livermore Valley Chamber website and Facebook page as well.
Jody, as far as there's a few questions in the chat room. Sort of, have you covered all those? I see one from Laura. Does this apply to employees laid off before April 1st? I assume she means bringing them back as far as utilizing the PPP funds.
Right. Yeah.
So it's pretty rigid right now on the period of performance starting right after the funds are dispersed, and that's the question maybe for a policy question in terms of adjustments that can be made. But right now, the period of performance would start right after the funds are dispersed, not any time prior to that.
And somebody asked, what is PPO?
I think they meant PEO. It was something that I mentioned. And PEO is a professional employer organization. So it's a company like TriNet that'll handle your HR and payroll. If you're a smaller company, they step in and work with you in that regard. So you either have it or you don't have it. It's if the employees are your own, then they're gonna go through your payroll system. But a PEO would go through theirs, but it still counts for here.
Would mileage reimbursement be considered an employee expense? I would think so, but
that's not taxable. Carlos, maybe you might want to chime in. I don't think that would count as a utility type payment either.
But what about payroll expense? You said it's not taxable.
Yeah, I don't think that goes into your box one, which is typically where you would pull your payroll from.
Anything on that, Carlos?
Yeah, I would tend to agree, but I haven't seen anything specifically on that. But like I said, they can send me that question, and I'd love to hear the answer as much as everybody else. In these forums, I can provide an answer, but have them send me the question. And like I said, I am escalating some of those, and sometimes I'm happy to find out that we do get an answer back. So definitely feel free to send me an email, and we'll look into it.
Excellent. Can we get Carlos's email?
Yeah, sure. I'll go ahead and give it. I'll spell it out right now. It's carlos.gutierrez@sba.gov.
Excellent. I think that's it.
And we have 3 minutes to go here, Jody.
Yeah.
And we're going to post this recording when it's ready on our two websites, Livermore Chamber and on livermoreupdates.com. We're also going to put it in our e-announcements for those of you that receive those. If you don't, please reach out to us. We'll add you to the list. They've got all the latest info on COVID-19 and funding programs during the shelter in place. And we will push it out on our social media platforms as well. As soon as the info is ready, the slides will be there. This recording will be there. All of the contact information from our panelists will be on there as well. And which includes many of the links that were referred to in this program today. So with that, are we done on our questions? Did we cover everybody?
I believe so.
Okay. So I'd like to thank our panelists, Carlos and Charles and Frank and Jody for doing this. And I want to thank all of you out there for streaming this. And it will be recorded, so you're welcome to look at it again and share it with your network as well. And just remember, we are all here for you. We are standing by to assist and support you through these challenging times during shelter in place. We hope that you remain healthy and safe. And also, don't forget, Sunday is Mother's Day. We're forgetting all the holidays during this really weird time. But yes, there is a holiday this weekend. And so we wish you all well. And of course, you can always reach us at the Chamber of Commerce here. My email is dargula@livermorechamber.org. And our phones are still working. We get our voicemail messages emailed to us. And that number is 925-447-1606. And I want to thank everyone. Have a good weekend. Any other closing comments from any of our panelists or Jody?
No, thank you, Charles, Frank, and Carlos. I really appreciate the information.
Appreciate it. Everybody be safe.
Thank you. Have a good day.
All right, thanks. Bye, all.